Welcome to Market News, June 26, 2026. I am your host. Let me give you the one-line takeaway to carry with you today. The S&P 500 ended flat as Apple weakness offset Micron gains, and the broader market showed what happens when the most important stock narrative of the year meets the most expensive AI-driven supply chain it has ever faced. Apple raised iPad and MacBook prices, citing higher chip and memory costs amid the AI boom. Apple stock traded down on the news. Meanwhile, Micron, the bellwether for memory demand, climbed on its own merits. The result was a market stuck between two gravitational forces: AI infrastructure demand pulling prices up, and the cost of that same infrastructure pulling consumer products higher and squeezing margins. Let me walk you through everything that was moving today. We will cover the macro market close, the Apple AI cost nexus, the AI chip and data center build-out including Qualcomm and Broadcom, notable institutional trades from Burry, the emergence of 24-hour markets and on-chain trading, and then the technical signal snapshot across the full universe. Let us start with how the market closed. The S&P 500 ended flat. The Nasdaq 100 and the Dow posted modest gains. The Russell had modest gains as well. MSFD, Qualcomm, SBCX, BMBL, and Sono were names in focus. This was not a runaway rally, and it was not a sell-off. It was a day where the two stories you keep hearing about, the AI infrastructure build-out and the cost pressure of that build-out, were actively fighting each other for position. That is a mature market signal, not a panic signal. It means the market is trying to put a fair price on two truths that happen to pull in opposite directions. Now, the Apple story. Apple raised prices on its iPad and MacBook lines, directly blaming the cost of chips and memory. The supply dynamics are real. Memory costs are being pressured by the confluence of Micron's supply positioning and the broader AI chip demand flowing through NVIDIA. The name to watch here is Apple, which traded down following the announcement. This is not just a consumer electronics story. Apple's move is a proxy for the entire industry. When a company of Apple's scale raises prices on core products, it is telling you that the bill for the AI boom has arrived at the product level, not just the infrastructure level. The market heard that, and the stock moved lower accordingly. But let us also note the other side of the semiconductor coin. Micron, climbed on its own merits, and the broader semiconductor index, SMH, was in the mix. Qualcomm, popped today on news that AI data centers will become its next big growth engine. Qualcomm said this explicitly, and the market responded positively. The connection between Qualcomm and data centers may not be obvious at first glance. Qualcomm has long been associated with mobile and wireless, but the shift is toward edge computing in data centers, and AI inference workloads are creating a new product mix for a company once defined by smartphone chips. Broadcom is also back in focus today. Broadcom built OpenAI's first chip in record time, according to reports. But the financial benefits of that achievement may flow elsewhere. When you are building custom silicon at that pace for a company like OpenAI, the margins and the long-term customer contracts matter more than the construction timeline. The tickers in this story, APO, NVIDIA, AMD, are all tracking the same question: who actually captures the value from building the physical AI stack? OpenAI itself made headlines today as well. Reports indicate OpenAI is considering delaying its IPO until 2027. The relevant tickers to watch here are MSFD, since Microsoft is a major investor, alongside SBCX and Goog. An IPO delay pushes the timeline for a potential public valuation further out and extends the window in which private market stakeholders, including Microsoft, carry the capital load. Now, let me turn to notable institutional trades, specifically from Burry. The filings showed that Burry bought long-dated Microsoft calls. That is a big move. Long-dated calls mean he is willing to lock an exposure well into the future. He is not trying to front-run a quarter, he is positioning on a multi-year thesis centered on Microsoft. He also added to his JD and Adobe positions. On the flip side, he trimmed his Palantir short. PLTR, JD, FISF, BAPA, and ADBET are all names connected to this round of activity. For a trader known for deep skepticism, buying long-dated calls on one of the largest and most profitable technology companies on Earth is a significant signal. Now, one of the most structurally interesting stories today, and you have to set aside the day-to-day stock moves on this one, is the move toward 24-hour markets. Reuters reported a landmark shift toward continuous, round-the-clock trading. Dealers have expressed concerns about the risks of always-on markets. The argument is straightforward: markets now close to allow participants to process information, manage risk, and rebalance. If you remove the close, you remove the circuit breakers of time. On the practical side of this shift, Decibel has brought Apple, Meta, and Microsoft onto on-chain trading platforms that operate without market hours. Apple, Meta, MSFD are the names here. The ticker XIC is the Nasdaq, and MSTR is also in this space. There are new instrument tickers like APT 21,794 USD and LIT 39,125 USD that are showing up as part of this on-chain infrastructure. If this trend accelerates, the way we think about volatility, overnight gaps, even the concept of a fair price at a given moment may all need revision. The dealers who fret about it are the people who build their businesses around the existing framework, and their caution is worth taking seriously. Let us step back and look at the macro backdrop. JPMorgan reset its oil price target for the remainder of 2026. JPM and CL, the crude futures contract, are the relevant tickers. Any adjustment to a bank's oil price view carries weight, and a reset for the rest of the year suggests the outlook is in flux. JPMorgan also named 2 new presidents, shaking up the Jamie Dimon succession race. This is not a trading signal, but it is a governance signal about one of the most important banks in American finance. Bank of America flagged what it described as a major housing shift despite elevated mortgage rates. BAC is the ticker. When a bank that underwrites a massive share of U.S. mortgages sees a structural shift in housing, it is worth paying attention whether it is upside or downside, because housing is a lagging indicator that leads inflation. TD SYNNEX, the distributor stock SYNNEX, surged 81% year-to-date, raising valuation questions that simply Wall Street explored. When a mid-cap name doubles in a year, the market is either pricing in a massive inflection or running ahead of fundamentals, or both. Then there are the space and nuclear stories making their way through the news cycle. SpaceX created an $82 billion opportunity according to one major report. SBCX is the ticker. And OKLO, the nuclear innovator OKLO, is using AI to accelerate nuclear reactor design. NVDA comes up there because AI-accelerated engineering is a natural fit for NVIDIA's compute stack. These stories feel like they live in a different news category from S&P 500 closes, but in a market where the dominant narrative is AI and infrastructure, they belong to the same ecosystem. Before I wrap the narrative, let me close on the technical signals, because the full spectrum read tells you the market is not as clear as the headlines suggest. The signal engine analyzed 10,682 symbols and produced 11,580 total signals today. The overall balance is 12 bullish calls against 38 bearish calls. The skew is notably bearish across the broader universe. The top bullish signals are concentrated in names with strong momentum: KTTA, RNWWW, TBLA, WGSWW, and WOK are all flagged for strong momentum up. On the bearish side, BFLX, DINQ, and GDEVO are all in overbought territory, carrying overbought warnings. KTTA and NIX will carry potential overextension warnings. Again, KTTA appears on both sides: strong momentum and potential overextension, which is the kind of tension you see in names that are running hard and the market is unsure whether they have more runway or are due for a mean reversion. The takeaway from the signal dashboard is straightforward. It is not that the market is broken or collapsing. It is that out of more than 10,000 symbols, the bullish setups are narrow and the bearish warnings are broader. Upside is concentrated in a very small set of names driven by momentum and speculative excitement, while overbought and overextension flags dominate the rest. When that is the balance, it usually means the broad rally is fragile. It is one strong name away from turning into a multi-stock correction. Let us put it all together. Today the S&P 500 closed flat, but the story was anything but flat. Apple is raising prices because AI-driven chip and memory costs are squeezing it. Micron is climbing on its own strength. Qualcomm says AI data centers are its next chapter. Broadcom built OpenAI's chip in record time, and OpenAI may delay its IPO to 2027. Michael Burry is buying long-dated Microsoft calls and building out positions in JD, Adobe, and trimming Palantir. Decibel is bringing Apple, Meta, and Microsoft onto 24-hour on-chain platforms. JPMorgan is resetting its oil price target. Bank of America sees a major housing shift. And the broader technical signal across over 10,000 symbols is 38 bearish warnings against just 12 bullish ones. The market is telling you that AI is not a theme anymore. It is a supply chain, a cost structure, a competitive moat, and a valuation challenge. The 24-hour trading experiment is a separate revolution happening at the same time. And beneath it all, the signal dashboard is warning that the breadth is thin. Stay focused on the names that matter. Watch the overbought signals before they become drawdown signals. And keep in mind that when Apple raises prices on the back of AI demands, you are not just reading a press release, you are reading the cost of the next decade written in the margins. That is all for today. Thank you for listening to Market News. We will see you tomorrow.